Hi, welcome to WealthMills Securities Weekly Market Wrap. It's a joy for me always to come before you to share about market views. This week, Indian markets are going through a very positive territory. In fact, every day the markets are going up. The main reason for this kind of positive momentum in the market is led by first of all, the positive global cues, especially the support market is witnessing from US Dow and S&P 500 and Nasdaq. Currently, the S&P 500 and Nasdaq, they are trading at all-time high levels. So, Indian market, because of the support it's witnessing from the US markets, Indian markets are witnessing a catch-up rally in the market, and right now what we can see is there is a broad-based rally. The stocks which have not participated earlier during this momentous rally, which was started on 23rd March, those stocks also started participating in the market. The stocks which were sleeping for years and months, these stocks are also started participating in the market. Altogether, we are currently in a very positive uptrend at present. Technically, we see 11,300 Nifty level as a support zone, and 11,000 is the strong support zone for Nifty. If we keep on receives the positive cues from the US markets, we can witness a new highs in Indian markets also in the days to come. At present, everyone's eyes are on US elections, and elections are just ahead of 70 days. So markets are looking for the outcome of US elections. So at WealthMills Securities, we have done our number crunch, and we have done how the markets are going to behave with respect to the US election outcome. Before sharing that, one of the key reasons why Indian markets are currently trending at in a positive territory is, one is the global cues. The second one is, despite of negative results that companies delivered in Q1, markets are running upwards. So there are people who have different views. Some people are telling there is a bubble is building up in the markets. I am not here to make a conclusion whether it's a bubble or not, because there will be always divergent opinions in the market. When you buy a stock, there is a person who is selling. When you are selling a stock, there is a person who is buying. So in market, always stock markets always about the divergent views. So there is nothing wrong. There will not be any consensus of opinion in the market. In March, people were thought that there will be a worst case scenario. It is the end of equity markets. That's what people were thinking. But market witnessed a sharp rally, and right now people might think the bubble is building up. So there will be divergent views in the market. But I would like to tell you, always wealth was created historically. People who are positive, nowadays positive is a big negative word to listen, but in stock markets, always people who are positive only, they made money over a period of time participating in the bull markets. The second reason, in India, as 60% of Indian population still lives in rural areas, and also they are depend upon agriculture based sector. Their still lives are, the economy is predominantly agro-based economy and agro-based industry. So currently India is witnessing a fabulous monsoon, and water levels in all the major reservoirs are above normal. So we are going to witness a bumper Kharif crop this year, so which is going to increase the rural demand in the economy. This is one of the key reasons why Indian markets are witnessing a positive rally in the markets. Now I would like to share about how the US elections going to have influence on our US markets and also on the Indian markets. If we compare the numbers, always in a third year of US election, that means the presidential tenure, third year normally the average return will be starting from 1935, the return will be 10%. In the fourth year, which is the election year, the returns from US markets is on an average at 12.5%. Next, if you see, if during the election year, If the Democrat elected during the election year, the returns on an average comes from the S&P 500 around 7.4%. In a Democrat elected inaugural year, S&P have given historically 16.2% returns. If the Republicans elected in the election year, it gives 15.2%. In the inaugural year, if the Republican elected, the return historically in an inaugural year when a Republican elected 2.6%. If you further see in the election outcome historically preceded for stocks, if the Republican re-elected during the election year, S&P 500 delivered 14.7%. In the inaugural year, S&P 500 given a return of 12.2%. If a Republican gets re-elected, which is not the scenario at present, 10.6% during the election year. In an inaugural year, it gives 2.7%. If a newly elected Democrat during the election year, markets historically given a negative return of 2.8%. But in the inaugural year, a newly elected Democrat, 21% S&P historically have given the returns in the inaugural year. So the outcome of US presidential elections is key for the market, and also Indian market is going to follow the US cues irrespective of the outcome of US markets. As the market is an uptrend in a positive mode, many of the companies are lining up with their IPO. I am here to caution the investors. Okay, one of my mentor, Dr. Mark Faber, used to tell like this to the investors. In the beginning of the bull market, investors have money and the promoters have vision. At the end, promoters have money and the investors have vision. So as the market is started rallying, many of the companies are lining up to raise money through IPOs in the market. Historically, if I see during the earlier decades, the beginning of 2000 and 1995, there was a fringiness to invest in IPOs. But later on, very few IPOs have created wealth to the investors. Right now, many of the companies are lining up to raise money from the public. So be cautious, understand the company fundamentals, why they are raising money. There are two aspects when it comes to IPO, whether the company is raising money or company is selling the equity. So understand the difference between selling equity and raising money, and be cautious, check the valuations, and we are going to witness many companies that are rising to raise money from the public during the bullish period of the market. I am always very much cautious while investing in IPOs, because as an investor, we don't have any say to determine the price of the equity. Whatever the promoters give the bandwidth, during the bandwidth only we need to buy. For example, the much hyped IPOs in India, they never created wealth for the investors. Starting from Reliance Power IPO in 2008, and also IPOs like Coal India, which came for a level of 600. Currently, I am buying the same stock, Coal India, with a patience. We bought to our clients at 130 rupees also. So very much choosy while selecting a company, understanding the fundamentals and also valuations of the company and the future course of earnings of that companies. People are talking about Life Insurance Corporation. That's wonderful. We welcome the IPO of Life Insurance Corporation, but we want to see how much price we are going to pay to buy that premium company. We have State Bank of India. When you compare, that is one of the cheapest stock, but the valuations even though the valuations of the stock is low, but people are not willing to pay. So understand the dynamics of the market rather than the buoyancy of the market. While coming to stock specific action this week, I would like to share about a company which is an oil marketing company. The main reason is, even though different stocks are running, the fundamentals are weak, and also there is no sales growth. Even the stocks are at above the fair valuation zone, also those stocks are running. But we identified pockets like oil marketing company, especially Indian Oil Corporation, which is trading at a fair zone, which is at a book value, and the market capitalization of that stock is 88,000 crores. As the lockdown eases, there will be a tremendous demand for the oil and diesel and the oil related products. So there will be a pent up demand that's going to come, because right now, even though we are in the end of August, the net sales of oil and diesel are still down in the month of August also. So we can expect there some kind of downtrend in the stock prices. But as the economy eases the lockdown condition, as people start traveling, as the trade takes place, as the logistic movement that moves further, there will be a huge pent up demand that comes for the oil and diesel. So we expect the earnings of these companies to go up, and these companies have very good cash reserves, and also these companies have the muscle to absorb the inventory losses. So we educate our investors to buy Indian Oil Corporation. It's a very safe stock, and with a very good dividend yield, and the stock can deliver decent returns in the days to come. This is all with me this week. Thank you for watching, and do subscribe for our YouTube channel, and like us at our Facebook page, so you will get regular alerts and updates on the markets. Thank you.